My current investment portfolio in total is worth roughly £48,000. In this video, I'm going to be talking through how I plan to grow that to £75,000 by the end of 2022.
Drum roll, please.
I'm mainly going to be talking through my own contributions and what I'm going to be investing into, a dividend that I'm going to pay myself through my company, and also gains that I hope to make across the year, and then how all of that will then total to give me a 75k portfolio by the end of the year. Welcome back to another video on Making Money Simple. My name is Ryan. I do weekly videos on investing and personal finance. There's loads of links, useful links in the description if you want to find out more. But I'm gonna get straight into how I plan to grow my pot, my total investment pot, including all of my investments, from 48k to 75k by the end of 2022. It's obviously quite a large goal because in order to go from 48 to 75, if my maths is correct,
2 + 2 is 4.
I'm gonna need a 64% increase throughout the remaining 11 months of the year, including both contributions and gains. Or if you're looking at it in absolute terms, I obviously need to contribute or have gains of £27,000 in the next 11 months in order to get to that 75k target. But here's how I plan on trying to achieve that anyway. Number one is through my own contributions, and these are the investments that I'm going to be making going forward. The first thing is my stocks and shares ISA, which I contribute £650 to per month. Over the next 11 months, that'll be £7,150 of contributions of my own money from my own income that I get from my 9-to-5 job. The second investment sort of pot is then my workplace pension, which through my own contribution and my employer match that I get, over the next 11 months, I should hopefully have around £5,500 that then goes into my workplace pension. The third one is then crypto. So at the moment, I'm actually getting paid monthly in crypto through a brand partnership I have through Making Money Simple with Crypto.com. That's going to be continuing until the middle of this year. Hopefully they extend it, but who knows what will happen. So at the moment, I'm using that money that I'm earning with them through making videos for them to invest into crypto. Assuming that doesn't get extended, I'll then once again go back to making my own crypto investments out of my net pay, whereas at the moment I'm fortunate enough to use that money to invest into crypto, if that makes sense. But hopefully across the whole year, the next 11 months, I can make roughly £5,000 worth of crypto investments. That's including the sort of sponsorship money that I'm getting through that brand deal, and also my own contributions that I will make out of my own net income, once again from my 9-to-5 job. So in total contributions across my stocks and shares ISA, my workplace pension and crypto, I'm hoping to contribute £17,650. If you add that on to my current pot, assuming there's obviously no growth at the moment, then that gets me to over £65,000. So the contributions, my own contributions, and I guess my own income, putting that into my investments, is how I plan to get from most of the way from 48k to a 75k investment pot. And I'm going to come on to a bit more later on why contributions are so important, as ultimately they're the only thing we can control when it comes to investing. Now I've gone through my contributions, the second thing I want to touch on, which I mentioned at the start, is a dividend that I'm going to be paying myself through my own company. The company is obviously this, Making Money Simple, which I set up as a company at the start of 2021. I've already made a video on my Making Money Simple income for the whole of 2021. I'll link it up top somewhere, so I won't spoil the surprise of how much it was. So if you want to watch that video, check it out after this one. But I'm hoping to pay myself a dividend from my company of roughly £5,000. Now I guess to give a bit more context, I obviously earn money through the company, which I need to pay corporation tax on. I then withdraw a dividend in my own name. The first 2k is tax-free when it comes to paying dividend tax. The rest of it is then taxable. It'll be in my basic rate band, so I'd pay tax of 7.5%. Dividend tax is actually increasing by 1.25% from April 2022, which is obviously why I want to try and withdraw a bit more than just the 2k, because I'll pay lower tax of 7.5%. But unfortunately, I also need to pay student loan on this. Student loan, even though it's called a loan, it's actually a tax in the UK. It's not a debt, and it's a tax of 9% above anything over 27k worth of earnings in a tax year. So I'm above that threshold, so it means any dividend I take, I will pay corporation tax first, potentially dividend tax, and then also 9% student loan. I haven't worked out exactly yet, but to actually get £5,000 net income in my own personal name that I can invest, I'll probably need to take about £8,000. You know what, I'm actually just going to work it out quickly just to see how much I'll need to take out of interest. So from a quick calculation, I'll need roughly £7,500, a dividend worth £7,500 that I will then receive into my own name, pay all those taxes I mentioned, and then have 5k left to actually invest. I will probably put that money into my stocks and shares ISA, in the FTSE Global All Cap, all in one go. Even though it's a large amount of money, and normally I'd say with larger amounts of money, it's better to dollar cost average it in over time. For me, relatively speaking, it'll be about 10% of my investment portfolio, so it's, I guess, still relatively small. So I'd say up to about £5,000, I'd be happy to just lump sum invest, because obviously I'll be buying and holding for the long term, earning dividends in the meantime. So yeah, that is the second way I'm going to be contributing through my dividend, which will hopefully be around £5,000. Adding that to my previous contributions, which was £17,650, I now will hopefully have across the rest of the year £22,650 worth of contributions. Adding that to my current investment pot of 48k roughly, and I get to 70,650k. So for simplicity's sake, we can just say that gets me to 70k, from 48k to 70k, just through my own contributions.
That's a lot of damage.
Now, number 3, we're going to talk about capital gains that I'll hopefully earn across the year. Now, it's obviously important to say it's impossible to predict what the market's going to do, whether that's the stock market, the crypto market, the property market, the Pokemon card market, NFTs, whatever it is, it's impossible to predict what is going to happen. But over history, when it comes to the stock market, you generally expect 7 to 8% across the year. So I'm going to assume I will earn 8% across the year. On my 48k that I've got already, 8% is £3,840. If I then say the contributions that I'm going to be making, obviously you sort of have to prorate that growth. Say I earn 4% on that 22k's worth of contributions, that will then give me just over £900, £906. So in total, in capital gains across the year, I'm hoping to earn roughly £4,746.
Here comes the money.
Now, for those who have been crunching the numbers very quickly there, you'll then have worked out that that would give me an investment pot at the end of the year of £75,396. And that will hopefully then get me to the goal by the end of the year of a 75,000 plus investment pot. Split across, of course, my stocks and shares ISA, my workplace pension, and crypto being the main 3 pots that I invest into. And then in total, that'll give me 75k. And I actually think this is fairly likely. The reason why is because the only assumption and the only uncertainty I've made here is really the return I'm going to be earning. As I mentioned, the most important thing when it comes to investing is your contributions. That's all you can really control. The market over the long term will give 5, 6, 7, 8%, whatever it will over the next 50 years. No one knows. Crypto markets will probably be a lot more volatile. It'll be interesting to see what that gives over the next 50 years as well, assuming it's still around. I mainly stick to the large cryptos like Bitcoin and Ethereum because I believe they'll still be about in decades to come, and hopefully should give a higher average rate of return than stocks, but I'm still assuming here, to be conservative, that they will give around 7 or 8% per year, just like the stock market historically has. But contributions are the only thing you can actually really impact. All we can do today and every month is contribute as much as possible to these different pots, and then let the market, let time and compound interest do the rest, and that is what then builds your wealth over the long term.
Knowledge.
So across the year, I've said I'm going to be contributing just over £22,000. That will then automatically get me to £70,000. Of course, if the market crashes 30% in October, then I'm never going to hit that goal. But at the same point in time, if the market has a great year and ends up 30% up, then I will smash that goal. So the assumption and the uncertainty is, of course, what the market is going to give. And it's almost impossible to predict what it's going to give. As I said a lot of times already, the most important thing is just start investing, stay investing, invest regularly, and almost ignore what the price is.
Knowledge.
I'm not planning on living off of or using any of this money for years and years to come, probably a decade or 2 plus. So if the market does crash 50%, even though it's going to be sad, I'm not going to hit my 75k investment pot goal or target. Over the long term, if I'm investing at cheaper prices, if the market does crash in a few months, it's then actually better for me over the long term. But assuming my contributions can be roughly £22,000, I will be most of the way there. I then just need the market to do the rest, and if it gives something around a 7 to 8% return, then I will get past that 75k and I will hopefully hit this goal. I'm going to leave the video there. Just to reiterate again, once again, the only thing we can control is our contributions at the moment. So that is why if you can increase your income, you can then increase your contributions, invest more today, more time in the market, more compound interest, and you end up with more wealth over the long term. That's what I think anyway, and that's my plan. Just trying to invest as much as you can each month. Of course, whilst having fun and going on holiday and going on nights out, and you gotta have balance as well. But yeah, that is my plan, my investment plan for this year of how I'm gonna grow my portfolio. Thank you very much for watching. I'm always interested to hear your thoughts. So whatever you think of this, leave it in the comments below. And yeah, I'll see you in the next video. Thank you for watching.